Hello and welcome to Business Incorporated. I'm Chimeze Obi Iwagwan. Coming up on the show, World Bank approves $300 million to consolidate social safety nets for children and poor households in Tunisia. Kenya's inflation rises to 5.90% in March. And South Africa's Johannesburg Stock Exchange receives its first listed social bonds in the country. All right, let's get the show started with intraday market numbers, which were mostly negative in Africa. Only the JSE index in South Africa jumped 1.31% as the stock exchange welcomed its first social bond. On the flip side, Nigeria's main index began trading in the new month on a negative note as the all-share index fell 0.38%, while the EGX 30 was down by 9 basis points. Kenya ended Wednesday's session negative, and still looking at those numbers coming out from South Africa, talking about the social bond there. The exchange welcomed the first listed social bonds valued at 609 billion rand to its sustainability segment. According to the stock exchange, the funds through the capital markets will be given to property entrepreneurs who redevelop buildings in urban areas with the aim of supplying high-quality, affordable rental housing. The JSE launched the sustainability segment in June 2020 with the aim to provide a platform for companies to raise debts for green, social, and sustainable initiatives. The segment makes it accessible and easier for companies to list and trade sustainability-related instruments to raise funds for activities directed at sustainable development. And looking at the Middle East, investors there began trading in the new month with positive sentiment. All the major markets we track were positive. In the UAE, the Abu Dhabi index rose by almost 0.5%, while Dubai's index was higher by 0.29%. Elsewhere in the region, the Qatari index advanced 0.15%, while Saudi Arabia's index added 0.13%. In Europe, stocks advanced today amid a raft of data releases from the region. Well, let's get more details from Conrad there, standing on the floor of the stock exchange. Hello, Conrad. Good afternoon. Happy talking to you today.
Good afternoon, Jimmy. What a joy to be back with you on the air, to be back on Channels TV.
So purchasing managers in the euro areas are even more upbeat than anticipated until now. So give us an update on the data and how the markets are taking it.
Well, the Purchasing Managers Index for the Eurozone's manufacturing sector rose to an all-time high. And this monthly jump from February to March, from 57 points to 62.5 points, was the strongest monthly increase since the data collection started 24 years ago. So no wonder that the German share index DAX also climbed to a new record of 15,113 points on this Thursday, which is, by the way, the last trading day here in Frankfurt before Easter. A lot of this has to do, of course, with Joe Biden and with the huge stimulus he planned for infrastructure in the United States. Many German companies, many manufacturers, companies like Siemens, for example, they, of course, are hoping to get a share of this business. But let's not forget also the European Union plans to spend big. The European Union has set up a recovery fund called Next Generation EU, and this is worth 750 billion euros. Up until now, not 1 cent of this money has been spent, but it for sure has done a lot for sentiment on the markets as well as in the real economy.
And after a disappointing first trading day, shares in food delivery service Deliveroo are trading lower once more. On the other hand, in Frankfurt, shares of competitor Delivery Hero are strong gainers. What's behind that?
Well, Delivery Hero, which is the German company, gets the support from South Africa through its subsidiary Prosus. The Naspers Group has said that it is increasing its share in Delivery Hero. The reason for this is that Naspers does not want to have its around about 20% share it is holding in Delivery Hero to be diluted. On the other hand, Deliveroo in the United Kingdom is mainly backed by venture capital firms, companies that fail to invest, to convince other investors, companies like Aviva, Aberdeen Standard, to take part in the IPO, which basically is the reason why this IPO failed. Underlines once again how important it is for companies to really communicate well before you IPO, and that it's also helpful and important for a company to have a large investor who says, here I am with my money, willing to invest it in this company. One company has it, Delivery Hero, the other company does not, and that's Deliveroo.
For Deliveroo. Anyway, there's a lot of talk about hedge funds lately. Now, several European governments have curbed demand from hedge funds for their government bonds. Why? What's going on?
Well, you know, the European Union, which is also issuing government bonds, also France, also Spain, they all want to prevent that hedge funds get too big in the process of issuing new government bonds. When these auctions happen on the primary market in recent months, more and more hedge funds have shown up, ordering many more bonds than it would realistically be possible to get. And this is a problem for the issuers of the bonds because it sort of dilutes the whole picture. It makes it very difficult to plan future bond issuances because you don't know what the exact demand will be. What's more, of course, everyone knows that the hedge funds are trying to quick money here. Everyone knows that after these bonds were issued on the primary market, you can easily sell them on the secondary market, where the European Central Bank every month buys government bonds for billions of euros. This is a very secure bet. And it's not officially said, but if you talk to traders, they will tell you that they think that this is the main reason why the governments want to put a cap on the orders of hedge funds. They don't want to allow them to make too easily their quick money bets.
Well, Conrad, I'm sure you're all gagged up to go on your Easter holiday. It's a long Easter break, so I wish you all the best. Please keep safe and be well.
Thank you, Jimmy. Take care.
All right, in the UK, the PMI also surged, the highest jump in a decade. Let's see how the markets are digesting the numbers. Simon joins us now. Hello, Simon. Good afternoon. Well, the PMI went much higher than analysts had forecast. Well, we had that conversation with Juliana in the morning. But how are the markets reading the numbers at intraday?
Yeah, afternoon, Chimmy. The Purchasing Managers Index was a lot higher than forecast. Many predicted the FTSE 100 would have a flat start to April as the market reacted to what was a very bad start for the food delivery company Deliveroo's stock market debut. I heard you talking about it just now. The company's share price, of course, dropped nearly 30% at one point, the worst IPO in London's history. And I think a lot of analysts are thinking that this would hit confidence in the whole sector and put founders off listing in London in the future. That remains to be seen, of course. But all of London's FTSE markets are up in today's intraday. Some are believing this is due to hopes of a swifter economic rebound. The FTSE All Share, that's the combined 100 and 250 indices, that's up by 0.79%. The FTSE 100 is up around the same amount, and the FTSE 250 up very nearly 1% there. Meanwhile, the pound not doing so well today at lunchtime. It's down slightly on the dollar, down 0.25% against the euro, and also marginally down on the Japanese yen.
The Liberty steel owner Sanjeev Gupta pledged not to shut down any of his steel plants in the UK, even as creditors seek to wind up key businesses. What help does this assurance offer the employees?
Yeah, Sanjeev said taking on the UK plants had been a tough journey and a labour of love, but he would not walk away. Mr. Gupta was, of course, rejected by the UK government after asking for £170 million worth to help the company. Some investors have also begun legal action to have parts of his metals group wound up, but the owner said none of my steel plans under my watch will be shut down. Liberty Steel employs 3,000 workers at sites in the UK, including Rotherham, Motherwell and Newport. The GMB union, that's a huge union here, said Mr. Gupta's comments were very welcome, but the making guarantees without showing financial backing just raises further questions. That's what they said. The main issue has come due to the collapse of his main source of finance, Greensill Capital, which leaves him dangerously exposed and obviously in a race to find new sources of cash. So it will be interesting to see if he can do that and whether those words do actually mean anything.
Well, we're going into the Easter weekend, but what should we be expecting next week when markets resume business?
Yeah, well, America always plays a big role in the markets here and, of course, around the world. Yesterday, investors cheering US President Joe Biden's $2 trillion infrastructure plan to kickstart the world's largest economy. The UK's FTSE 100 added 0.5% on that news. So big announcements from the Biden administration always affect the markets. It'll be interesting to see if the potential trade tariff war between the US and the UK continues next week. Markets will react badly, of course, if this is needed and is enforced, as the US government is saying it will be. That's in response to the UK government saying they're going to tax the big American tech giants. That's the Googles, Facebooks, Microsofts, etc. There's always the chance of unexpected world events happening, of course, playing their part. It's harder to predict what those will be. Donald Trump isn't in the White House anymore, but things like the Suez Canal crisis over the past few days can always shake up the markets. So it'll be interesting to see what kind of big news stories come about next week. Finally, of course, there's always the lockdown, how markets react to them. Oil prices plunged this week as new lockdowns and tougher travel restrictions came in across Europe, notably in France. Nearly 31 million people in the UK have had their first dose of the vaccine. So if that continues next week, markets are likely to react positively as it makes an economic recovery all the more likely. So any continuation of that could play a big part next week. Then again, the opposite is also true for the markets here. So we continue to open up and the economy looks better and the country looks like more business is happening in line with how the government wants it to, then you should see markets responding positively to that. We'll obviously bring you all of the latest here.
And I guess the outcome of the OPEC meeting today will be in focus. Well, we'll continue to track those numbers. And I'm sure you're ready to go on your Easter holiday. Enjoy the holiday, Simon.
Thank you, Jimmy.
And shares in Asia Pacific were higher today as the second quarter kicked off with several economic data releases out across the region. Hong Kong's Hang Seng Index led gains among the region's major markets as it rose 1.97% to close at 28,938.74. Japan's Nikkei 225 rose 0.72% to close at 29,388.87, while the Topix Index gained 0.19% to finish the trading day at 1,957 points. South Korea's closed 0.85% higher at 3,087 points. Mainland Chinese shares advanced on the day as the Shanghai Composite gained 0.71%, while the Shenzhen Component climbed 1.5%. Shares in Australia also edged higher as the S&P ASX 200 gained 0.56%. In the U.S., stock futures were higher this morning. Wall Street looked to build on a solid March following the rollout of President Joe Biden's infrastructure plan. Futures tied to the Dow Jones Industrial Average advanced 35 points, while those for the S&P 500 and NASDAQ 100 futures traded in positive territory. The move in futures came after Biden introduced his multi-trillion-dollar infrastructure proposal, which includes spending on roads and bridges, as well as green energy and water system upgrades. This marks the second major spending push by Biden's presidency after he signed a $1.9 trillion relief and stimulus bill on March the 11th. And in metals market prices, gold prices edged a tick higher earlier today as expectations of a $2 trillion plus stimulus plan in the United States raised concerns of inflation, while reports of a new vaccine-resistant virus strain also supported the unsafe haven appeal. Spot gold was up 0.2% at $1,710 per ounce, while U.S. gold futures fell 0.3% to $1,709 per ounce. Among other precious metals, silver dipped 0.1% to $24.36, while platinum was down 0.3% at $1,184, and palladium slipped 0.1% to $2,616. And after the break, domestic commodities market update is next. Do stay with us. All eyes are on OPEC Plus meeting. On Wednesday, a panel of OPEC Plus Joint Technical Committee agreed to revise downwards oil demand estimates 2021 by 5.6 million barrels a day this year. Well, let's talk more about this with Belumi Oshode, one of the research analysts with Financial Derivatives Company. Hello, Belumi. Good afternoon. Thank you for joining us.
Good afternoon. Thank you for having me.
So OPEC's share of global oil production was 3% in December, while Nigeria's production quota is about 1.49 million barrels per day. Now, do you think that Nigeria's quota could be maintained or cut? And if so, what are the implications?
Okay, so OPEC, as you know, is an oil-producing cartel under or an oil market where we have numerous buyers with few sellers, and OPEC actually produces about 27.3% of global oil output. And this shows that the relevance of OPEC has declined over the years. In the last 2-3 decades, OPEC controls about 60% of global oil production, and this shows that there is supply. Production supply has declined, and this also affected price. No, OPEC cannot, as an oligopolistic market, can either control price or output, and OPEC has tried to manipulate output in order to influence prices, and we have seen that the oil prices have returned to pre-pandemic level and have stayed over $60 a barrel since February, and this has been consistent, although we have seen swings in oil prices. But beyond that, we expect OPEC, since they might maintain a status quo right now to continue production costs, to maintain prices, and also their compliance levels, very strict on compliance levels, to ensure that countries like Nigeria, we are actually compliant, and this will affect oil price going forward. However, in the long run, look at the fact that economies in the world are transitioning to a cleaner energy. This also will show that there will be a decline in demand for oil going forward. And according to the projection by OPEC themselves for 2021, they've projected that about 1 million barrels of oil production would there'll be a decline in oil demand, and this shows that there's so many things are happening in this market. So going forward, we expect that at least they maintain status quo to stabilize prices, and at the same time, we will see a global demand, a decline in demand for oil.
Now, bringing it down to some of the developments here on the downstream sector, we heard the NNPC announce that there will be no increase in the price of petrol until issue raised by Labour is concluded. The landed cost of petrol is currently 189, while the selling price is 162, and is projected to increase to about 232 naira as if the price of oil remains at current level. So what could be the new selling price of petrol in Nigeria?
It's a painful truth that we've seen that in the last couple of weeks, we've seen, like I will use word teasers of, possibility of pump price increasing. And like we know, currently pump price is actually, PMS pump price is actually sold at 162 naira, but the landed cost is about 186. And in fact, the projected cost could increase to about 236 naira, looking at exchange rate pass-through effect and what have you. So right now we have a deficit of about 27 naira. This shows that someone is bearing the cost, and we are clear of the policy direction of the government, towards full deregulation of the downstream, oil sector, and also the fact that the total removal, gradually towards total removal of subsidies. So the possibility of increase in pump price is almost inevitable, as we see in coming months. So it's possible after the negotiation with the labor union to see pump price increase to very close to 200, if not slightly above 200, probably around 209 to 212 naira. And that is a painful truth that we have come to know that is coming to play, and we should be prepared for that, because the cost has to be paid for. Once the oil price remain at this current levels or even increases, looking at exchange rate pass-through effect and the landed cost of pump price, we expect that eventually petrol prices will increase.
So there's a strong correlation between the price of petrol, kerosene, and headline inflation. If the price of petrol and kerosene increase to this projected level of 232, what will be the impact on the headline food and core inflation?
Like you rightly said, there's a very strong correlation between inflation, core inflation, food inflation, headline inflation, and the prices of oil, gas, petrol, and all that, because we've seen the pass-through effects through the logistics costs. We've seen it through the transportation costs. In fact, for instance, within state transport costs has increased to about 63%. While using bikes, has increased over 100%. And also this increase in logistics also affect companies' cost of production. It increases. So we will see this parallel movement still occurring, in the next few months, because as pump price increases, as we are expecting, looking at what is going on, uncertainties around, and we expect that it will have a corresponding impact on inflation. So inflation rate might still trend upward, not just headline inflation this time around, even core and food inflation, because most of these food items are actually transported down to the southwest from the north, or middle belt, and using this increases through transport costs and other logistics costs that come around, and also transport movement of households, even firms transporting their produce to probably warehouses and all that. We've seen that this will affect inflation prices and to move upward in the coming months.
All right, thank you very much, Belumi, for sharing your thoughts there. We do appreciate it, and enjoy your Easter break.
You too, thank you.
And the World Bank has approved $300 million in financing for the COVID-19 Social Protection Emergency Response Project in Tunisia. The new project will provide cash transfers for approximately 1 million vulnerable Tunisian households to help them deal with the economic impact of the COVID crisis, while also supporting the rollout of a comprehensive national social safety net system. The project will also help protect more than 100,000 vulnerable children under 5 years old by covering their health and educational needs through a new child allowance program. The project has three main pillars. The first pillar will fund emergency cash transfers to poor and vulnerable households. The second will help protect human capital of youths from the country's most vulnerable, while the third will strengthen the social protection system to deliver efficient and inclusive programs capable of protecting Tunisians through any crisis in the years and decades to come. And data released by the Kenyan National Bureau of Statistics shows that Kenya's inflation rose to 5.90% year-on-year in March from 5.78% a month earlier. Meanwhile, on a month-on-month basis, inflation was lower at 0.40% from 0.70% in February. In February, the inflation rate rose marginally to 5.8% from 5.7%, which was largely driven by cheap fuel and food prices. And that's it on the program. Thank you for watching. I'm Chimizie Obi Iwagu.